you really should be focused when everybody's scared and everybody's puking their crypto, their ETH and Bitcoin. You should people how to do technical analysis in financial markets, of which I had no idea what that even was. So I had to learn it on the job.
That's the best kind of job, where you learn it on the
spot. But I had worked in pubs. I've worked in a garage. I've worked everywhere. So I've done all sorts of jobs in the meantime.
Okay, wonderful. Well, your job today is to teach us all about the crypto market. And on this podcast, we like to make business concepts less intimidating. So we'll treat it like a little bit of a 101 on crypto. Lots of buzzwords out there, so we just want to make this digestible for our listeners. So let's start with the context of where we are right now. The state of the economy is in many ways disarray. So in your own words, how would you describe the state of the overall economy right now?
So my view is that we're still paying for the effects of COVID that cause all sorts of problems. Like nobody could manufacture anything. Nobody could ship anything. Planes couldn't go anywhere. And so as COVID started to ease, people came back out of their houses, back into the office, back to consuming things. And there were no goods to be bought because all the shelves were empty because nothing got manufactured. So that caused this huge rise in inflation. Then the next thing, the central banks think, oh my God, it's inflation, because inflation's pretty bad because most people's wages haven't gone up as much as prices have. So everyone feels poorer. So the central banks think, God, we need to do something about this. So that's the Federal Reserve and the Bank of England and all these guys, and they raise interest rates. And that usually slows down the economy. And it has. The economy is actually falling off a cliff because they probably over-tightened. So even though we kind of know things are bad, the forward-looking stuff that I look at using my kind of macro framework suggests things are going to get really quite ugly over the next 6 to 9 months. So what the Federal Reserve are doing when they raise interest rates is they're taking what's known as liquidity out of the system. So what they're saying to banks and others is we're going to allow you to have less money to use around the system. So that means it's harder for anybody to borrow money. It's got more expensive. Your mortgage has gone up. Your rent's gone up. So everybody stops spending and the economy slows down. And that brings down inflation because there's less demand for goods. But it has other effects as well. Obviously, people start becoming unemployed again, which, people were kind of saved a bit by COVID, by the stimulus checks and what happened. But this time around, there's nobody really wants to save them because the Federal Reserve has said, we actually want unemployment to rise. So they want you to lose your job. So you buy less goods, so the price of goods falls, which is kind of a bit screwy, but that's what they want. And that whole mechanism of the Federal Reserve doing this has unwound a whole bunch of asset prices. So the stock market fell. I think the Nasdaq's down 30% as we're speaking, and the S&P's down 25%. The bond market collapsed. It's one of the biggest falls in the history of the bond market. Housing prices are coming down very fast. The price of oil to the price of commodities has collapsed. The price of cryptocurrencies has collapsed. So it's been a really, really tough 9 months in financial markets and for people's savings and investments and potentially for their jobs too.
So why has the price of crypto crashed specifically? And maybe provide some context on how cryptocurrencies historically have moved given the types of inflation or the rate of inflation we're seeing now, given how the stock market is moving now, given the broader context, why we're seeing this crash in crypto.
So crypto is a function of two things: technological adoption and the macro, the liquidity that the central banks are providing. Those two things are the key drivers. So if you zoom out of a log chart of crypto that everybody always tells you to do, you can basically see things like Bitcoin go up, just up over time, and up a lot. But it's very volatile. You get these kind of big ups and downs. So the question is what drives the big up, and then what drives the ups and downs? The big up is driven by the adoption of technology. There's now 300 million people using cryptocurrencies or investing in cryptocurrencies. It's growing at about 100% a year or so. It's the fastest adoption of any technology the world has ever seen. So people are adopting this twice the speed of the internet. That's why it's been so profitable, but it's also very volatile. And it's very volatile because when the central banks remove liquidity, which they've done in 2013, 2015, and various other points, cryptocurrency collapses because there's less money around for people. And this particular example, what's just happened over the last year, is to do with the fact that most investors in crypto are actually retail investors, and they dollar cost average. So they put in some of their paycheck every month. Now, the issue is if your paycheck's gone down, in purchasing power terms, you have less money to invest. So suddenly, cryptocurrencies are less active, the networks are less active, and the price has gone down. So does that change the long-term picture of the adoption of blockchain technology? Well, when you look at it and you see everybody from Nike to Gucci to Ticketmaster, you name it, all using blockchain technology, it's not going away. We're just in this period where it looks pretty ugly and feels pretty ugly.
So there isn't anything fundamentally concerning about crypto right now. I just want to reiterate what you said. This is retail investors, regular people who don't have as much money that they have to spend to invest in crypto. Is that right?
That's right. But then if you think of the big financial market participants that we've been waiting for to enter the market, some of them have. So these are the big pension funds and hedge funds and others. They're also struggling from lack of liquidity because their portfolios are going down from what the Federal Reserve are doing. So they have less money to put into crypto. So I spend a lot of time speaking to these big institutions and they're all ready to get involved, but they just don't have the cash right now, much like we don't have the cash because everybody's feeling the pinch. So if everybody's feeling the pinch, it's not going to drive up the price. But once this situation eases, it'll start driving up the price. Now, there's another piece of magic that happens with crypto, is crypto doesn't do well in inflation because of the reasons I said. But when the central banks start printing more dollars or euros or pounds or yen or whatever it is, that's called debasement of the currency, quantitative easing. And that is when crypto does really well. So one of the reasons I've been very closely following the prices in crypto recently is because as we start getting a worse and worse economy, we know eventually rate rises will give way to rate cuts. Quantitative tightening will go to quantitative easing, and those conditions are literally perfect for cryptocurrencies. And you
Rapidity with which it's adopted.
So there's two reasons. One, I think it resonates with people that it is a different answer to the financial mess that we live in. This hugely indebted economies driven by central banks and government policies, and people want a different way out. So it resonates as a narrative to people. But what's super powerful about crypto versus almost anything else is the fact of how it works with behavioral economics, because token systems are incentive systems by nature. So to explain it to you at a simpler level, Facebook is a viral set of products, whether it's Instagram, Facebook, WhatsApp. But we as users get to use those things, but we don't get any rewards except connecting with our friends or whatever. And the shareholders got rich as the network grew. So 3.5 billion people use Facebook technology right now. But with crypto, it's like we'd all been given Facebook shares. So imagine if every time you logged into Facebook or used Facebook, you got shares. So if you own part of the network, well, what are you going to do?